Nev, thank you very much. And ladies and gentlemen, it's a very great pleasure to have the time with you this afternoon. I always welcome the opportunity to speak about Revolver and how we're moving and migrating the business as we move forward. So what we have today really is the essence of what I call a great mustard seed story. From little things, big things grow. So building a copper business one step at a time. Please move on, next slide. Here we go. So Revolver exists as basically a two-project company, both well-advanced copper exploration. However, the difference with the Diane project is its dual nature. It has mining leases from a 1980s historic mining operation. And for those that don't know, the Diane project was, and still is, Australia's highest grade producing ever copper operation. So we've got what remains there. And in the industry at the moment, everyone's commented on it. I'm not adding any new disclosure there. It's tough going for explorers. So what we're doing is capitalising on the benefit of the diversification of our assets. So next slide, please. Again, next slide, thank you. So what we're doing is taking a break from the conventional orthodoxy of exploration. At the Diane project, as I said, we have remaining mining leases. We have quantified a very small at-surface ore body. So what we've taken now for more than 12 months, given the state of the market, is a headlong approach to actually commercialise the at-surface copper deposit. So we're 12 months into that. Very early next year, we're on track for commissioning a small on-site SX-EW plant. And by mid next year, certainly producing our own copper cathode. So we've taken that diversification step. We have an asset capable of production. It's very favourable geology. It's outcropping at surface. It's a low risk project from any of the metrics that people would standardly compare. Very capital light, a very small cost to get this thing into production with proven technology, SX-EW, on-site leaching with a very leach amenable ore. They're all the hallmark ingredients for a great cash flow. Now, it's a small project, not denying that. And as I said, from little things, big things grow. We're taking the opportunity over a 4 or 5 year period to develop a significant cash flow for this business. So it's not rocket science. Do the numbers. We've published the resource, 18,000 tonnes, current copper price, even with a little bit of an uptick. And with the nature of the ore body and the nature of the processing, we'll kind of be doing this at 100% margin. So it's a very, very, very generous, healthy cash flow. So what we see at Revolver is the opportunity to fund our future. Substantially, it'll be the best capital raise that we do. And we're looking forward to what it brings, because on our projects, and if we can advance to the next slide, please. What we've been busy doing since we listed in late 2021 is hurriedly exploring the region around Diane and our other project in the Mount Isa block. What we're stopping to do and what we're trying to portray here is step one is the near-term copper production, get some money, get some substantial money into the business, self-funded, very shareholder-friendly. Step two, we've already established that we have substantial prospectivity underneath the deposit. With the nature of what the Diane ore body was, it's not a unicorn, okay? Where there's one, there's more. And we have established, but we haven't thoroughly prosecuted what remains below. It's a really exciting potential. And given that we've got facilities on site, copper production capability, and our own healthy cash flow, all we lack is the resources to get in and properly test out what lies beneath. And a step beyond that, next slide, please. What we've also been spending a lot of time and effort doing is gathering the base data across what is effectively a 500 square kilometre region. We've added tenements, we've acquired tenements, and we've established that there's a very clear pattern of prospectivity across the Diane High Strain Zone. Advanced airborne EM, lots of ground truthing, some scout drilling. We have got more than just sniffs of very exciting regional prospectivity that, again, we just lack the capital. It's not the market. Raise a dollar, spend a dollar. It's not the way we see there's a strategy within Revolver and using the Diane business to give ourselves a great stepping stone to going forward. So small steps, one at a time. Let's develop this project, make some great cash flow, and go and grow to prosecute the nearby and regional prospectivity at Diane. So we're excited. We're looking forward to the remainder of this year. We're well through the pre-construction activities, wrapping up the column scale leach testing, outstanding results that we're looking forward to bringing to market. And that then precipitates a very short procurement and construction process with commissioning in the first quarter next year. So exciting times for us at Revolver, and we look forward to keeping everyone updated with a very encouraging news flow coming forward. So thank you and welcome questions.
Pat, I might start. I mean, I was speaking to one of your major shareholders actually yesterday, all very exciting. I mean, how are things progressing on the funding side, financing side, and some of the things that Cam Olsen said, just consolidation, M&A, joint ventures, farm-ins. How do you see that sort of in the copper space going forward? So 2 questions.
Look, the first question, Niv, about funding. We're taking a very deliberate action step here because of the state of the market, because of the capitalisation share price of the business. We need funding to build this project. We don't want to do it with pocket change. So we're structuring a joint venture at the project level that will give, on face value, a very good, pre-cash distribution as a joint venture participant. With the study work that we've undertaken over the last 12 months, the board has advanced its comfort level with significant amounts of debt. So whether it's debt or equity, we believe, we are well advanced with project level conversations, and we're going to take the right money. I will, anecdotally relay some stories. The first 6 months of this year, we introduced the project to a number of people. They liked it so much they wanted to steal it. So, as a compliment, we take that in the best possible light. But we're not going to do deals that give away this nugget of really outstanding value. We've got a lot of compliments. When people look under the hood, they realise what we've got. It's unorthodox. I'm the first to acknowledge that. We're taking a different approach to fund the business. We have the capability. It's my background. We have the board and management capability to deliver this project in a very low risk, cost managed way, develop some great cash. Our conversations need another 4 to 6 weeks to wrap up the right capital or the right funding mix. And we're excited. We think we've got a great future in that. Your second question about partnerships and arrangements, there's a big pie there, and we're more than happy to sell it, share it with anyone that wants to come along on fair and equitable grounds. Absolutely. So open to those opportunities, both on the mine progress, the copper production, or even the regional prospectivity. All calls taken with great delight.
Any further questions from Cam or John?
Richard? I think it's a great strategy. It's terrific to see that, and you've got the opportunity to do that. And I would have thought I'd probably speak on behalf of John and Richard as well. Given that you're outside of Cairns and it's been the coldest Melbourne winter in a decade, you should do a roadshow down Melbourne. You might get some interest. They'll only visit you in winter.
Yeah, absolutely. Look, I take your...
well done. No, I think it's terrific. It's good to see you moving forward, and I think you'll get support for that.
Thank you. Yep.
Pat, in terms of seasonality and wet season up there, just picking up on Cam's point about the weather, is there any sort of interruption to operations during the wet?
Look, John, when you take a chance to look under the hood here, it's a processing project. Yeah, it's one digger, 3 trucks. Will actually mine the entire ore body in 16 months. So it's really protecting the leach pads. It's all about water management. We're subtropical, so we're not coastal. We're well enough inland where we kind of get a metre of rain a year, not 4.5. So when you sit down and look at it, and we're high and dry, so we're perched up on top of high rocky ridges. The rain comes, it hits the ground, it runs off. Without being, we need to manage water on site because of environmental site water management requirements. But in terms of risk to the impact of both mining and processing, they're kind of low on the spectrum because of the dynamics of the site and where we sit. So we've, crazily enough, I've been the bunny on site, whether it's drill availability or seasonality. We've actually done all of our resource drilling starting in October, running through to March for the last 3 years. So we certainly know what it's like to work in that part of the world in the wet. So we've got a handle of it. And really, I underscore the reality again that it's a 4-year project. It's a smash and grab. And if you do those numbers on the back of an envelope, you'll kind of, your jaw will hit the ground on the potential earning there. So, we certainly believe we've got in our mind's eye the risks that we need to manage and a mitigation process to keep them in check.